You're looking at a chart of gold, and in this video I want to talk about a trade that I did earlier in the Asia session, and also I want to talk about the short trade that I am already in. Okay, this morning I posted a trade on my Twitter profile, this one here. Okay, this was a market maker sell model, right? Now this is a pump up, and I know by looking at the price action that this is just a pump up, a manipulation move. It's going up somewhere, and my job is to work out where it's, what's the draw on the liquidity, what's it reaching for. And then I look at time. So look at the time there, 9:30. Okay, we'll look at this on the charts. If we go back to a 1 minute chart, and let's see, there's the trade there. Okay, so let's first talk about the level that I identified. So let me go to a higher time frame. So that level there, okay, is this gap, right? You see that gap there? That's where that's coming to, okay? And coming to that gap, right? So that was my level that I had already marked on the charts as a level of interest. And I've then got to look at time. Do I get my short setup at that level at the time? Now, I've mentioned this so many times. I hope that you've taken note of this time, 9:30 p.m. for Asia. Asia trades are best at 9:30 p.m. Okay? So 9:30 p.m., the market taps into that level. This here, this consolidation is the key. Okay? This is the end of the the previous 15-minute candle, right? And so the previous 15-minute candle makes a high, okay? And then the candle that starts at 9:30, okay, takes out that high, which at that point in time is the high of the day, high of the week, okay? At that point in time, you've got to understand that. At that point in time, that high is the current high of the day, high of the week, okay? Now, the best time to trade Asia is 9:30 p.m. 9:30 p.m. goes up, takes out the high of the current, the current high of the day, which is also the current high of the week, and we get displacement down. Break of market structure, okay? This is the last down candle that made this high, okay? That's that swing low. We break it, okay? And we get the displacement, and now this move up is just balancing out. Look at the bodies of these candles. They are balancing out this fair value gap there, okay? And obviously there's one right here which the market taps into, right? So how precise is that? You get a break below the swing low that created the high at the right time. This was the high created at 9:30, high of the day, high of the week. At this point, we're above the previous day high as well, okay? Displacement for the gaps. So that's clear price displacement. Move back up into not just the bearish order block, right, which are these two up candles, but also the bearish breakout. You see that down candle in that swing there, right? So this is the same setup I've been talking about for shorts in multiple videos, and I've shown you this on a 1 hour chart, on a 15-minute chart, and now on a 1 minute chart. Okay, this is the breaker, the bearish breaker, right? That's the last down candle prior to the bearish order blocks. Displacement below this swing low, below that swing low. Okay, look at again, the midpoint has been respected of that bearish breaker. So I've shown you this over and over and over and over again on multiple time frames. You have to study the charts, right? You have to go back, look at the videos, and do your study. Okay, that's all it takes to be able to understand price action. Okay, where's all this happening? At that 9:30 p.m. Right? This is now the next candle, the next 15-minute candle, right? And we go down. So that's the entry on that trade. And as I said, I've journaled it. You can go back, look at the entries, look at the times, and look at the exits. I've also done a execution video on there for you, right? So I do a lot to help you learn, okay? But you've got to go and do the study. Watch the video, watch the charts, study the charts. You've got to go up and do the study. Go back and look at this on your own chart. Look at the time. Look at what the setup is, okay? Now, I exited into this gap here, okay? I saw this gap, and that's where I exited, around there. And I exited because I saw that this was crawling down. It started to chop. So my thinking was that maybe we're going to go back up and maybe fill in some of these gaps that are still open. That's why I exited, okay? So that was that trade there. I closed that. That's journaled. You can have a look at it. On the trade on the video, I marked out these lows as the target, right? And we can see we got that. But it doesn't mean that you have to hold until you get that, right? I've still made a good chunk of profit in this trade, right? Even though I didn't get my target on that trade. You've got to manage your trades. The idea is to be profitable, not to get pips, okay? You're not here to prove you can get the best exits. You're here to be profitable. That's the objective of trading, okay? And so if I see that we're coming into a gap on the way down and I'm seeing this choppiness, I'm going to take the money off the table, right? I'm not going to risk open profits of all of that just to get a little bit more, okay? So you've got to take your ego out of it, right? I don't care that we still went down and got that target that I was looking for. It's irrelevant. I've closed the trade, backed my profit, walked away. Now let's talk about the bigger time frame, okay? What's going on right now? So if we look at a 15-minute chart, okay, you can see this nice displacement. This is the first time. If you look, let me turn off all these lines. We'll talk about these levels in a moment. If you look at this chart, this entire week, we haven't had. See, here's the New York news from Tuesday. Okay, since then Look at every swing low. We've had no swing low broken. Every swing has just traded up, up, up. This is the first time we've had a swing low broken. Okay, right there. That is a breaking structure now. Order flow is bearish on this chart. Okay, so any break of this swing low is now a potential short entry on a pullback. Okay, I'm already short this. Okay, because the pullback here has already occurred. If I put a line, I think I've got a line there already. So there you go. There is the bearish breaker on this swing. That's the swing low. We've broken that. Okay, and with this candle here, it's pushed into there. That's my entry right there. Okay, that's 2,444. When I journal this, you'll see the entry 2,444. That's why I've entered. Right? We've had a nice displacement. That's the swing low that's broken on a 50-minute chart. That's the breaker. Okay, and that's where I've entered. Now that breaker is these two down candles, right? So the market can still push up into this level here or rebalance this. That's still going to be within the breaker. Okay. Now I've spoken about this in a video recently. I think I did it yesterday. Where's the easy target? Just here, just to close this gap. If I look at this on a 1 hour chart, okay, that's the easy target right there. That's all I'm going to be targeting. This is a 8 lot. Okay. So we'll get some, pullbacks and things like that for re-entry. But that's my target. It's easy. Okay. Now I do believe that we'll get down to 24.30. Okay. Why 24.30? Because that's the level here on a 4-hourly chart. Right. We may even get all the way down to what's this 24.20 something. Okay. But that level there is important because we've gone through there and we kind of need to come back there to rebalance the market. Right. That's the down move up, and we've got to come back down at least to there to rebalance at some point in the future. We don't know when. Just at some point. Okay. So if I take the 1 hour chart, okay, how do I get confidence on my exit, on my target profits here? So I take this manipulation, right? How do we know this is a manipulation? Well, because we've traded below it now. Okay, we've traded below that, so we know that was the manipulation. Okay, the Asia manipulation, right? And I've shorted from that size. Okay, and I've exited there in that gap, still on the chart. Okay, now if we take that range, let's do it manually. You can use the Fibonacci tool. I've shown you how to do this as well. And we go, let's draw a box of the high and the low of that. Let's change this color. Let's make it this color. Okay. So all I've done is I've taken the high of that up candle and the low of that up candle. Okay. To kind of gauge the range. And I'm just going to move it to the side. Okay. Okay. Make sure I'm not, yeah, that looks right. I'm going to copy that or clone it. Okay. And I'm just going to put that now from the low of where that starts. Right. So that's the range. Okay. The low of that to the high of that, that's the manipulation. I've got a box around there. So there's the box, starts from there to there. I've shown you this before, just repeating it here. And I've just placed it on the bottom. And what do I get? Like this target here. 2, 4, 3, 3. That's where I believe we're going. But I'm going for, and we probably will get into this, which is that wick I showed you on the 4-hourly chart. We'll probably get at the top of that box, which is, what's the high of this candle? 2, 4, 3, 1.95. Let's just call it 2, 4, 3, 2. Okay. And I'm simply going to, on a higher 1-hour chart, just close where the gap is. Even though I can project a level down to 2433, I'm happy to take it 2435 because that's the easy target for me. Okay, so that's the target where we've calculated this to go down to, and that is right on the open of that bullish order block. Look at the alignment there, right? So I won't be surprised if we get down there. In fact, I think we'll even get down to there where this, I've got this blue box there, but it's irrelevant. All I'm using these targets is for alignment. Is that mathematical target close to where I want to exit, which is here, and that is the 1 hour fair value gap, right? Yes, it is. It's also close to a 15-minute fair value gap, right? Now, what's the market doing right now? Okay, I like this, that it's come close to where I want to exit and gone back up because now it's creating liquidity. So we will come back down there, right? High probability that everyone's long now. Everyone thinks this is a fair value gap. There's probably, let's see, because this is a valid way of thinking. I'm just going to show you something here. Let's put on the midpoint. So everyone's looking at this fair value gap and saying, oh, yeah, okay, we're respecting the midpoint. This is a long, right? And that could be the case. Okay, I see this now as structure has broken. This hourly candle has closed below that swing low. Okay, to me, market structure has now shifted. Okay, this down candle is now changing the state of delivery from an ICT perspective. Okay, this here, where we've turned around and started to go up, okay, is manipulation. Okay, and that's now the liquidity that the market maker will use on the way down to this target. Now, that's not going to be the end of the move. I think it will go lower, but that's the easy target. Right? I mentioned this many times. I just look for the easy target. Okay? I want to be in and out of this market. I'm not here to get the big moves. Okay? You just don't need them. Right? To be profitable. You want the easy targets. So I just wanted to talk about those two trades and my current short position, which is fine. I've shorted from that level there, as I've explained my entry already. We can use this manipulation on the hourly chart to do projections as well. Right? If I take this off, okay, and let's use Fibonacci. So I'll take the low of that, the high of that, and let's first project down to, right? So what I've done on the Fibonacci is exactly how I've done it manually, right? That manipulation comes exactly down to that 4-hour level, that high there that I believe we will come down into, okay? So how cool is that? We have level on the chart where there needs to be the market pullback to balance that aligns with a mathematical calculation. So that's how I use those mathematical levels on my charts. I use them as alignment. Does that level align with something on the chart? Yes, it does. It's a level that the market should come back down to for rebalancing. Okay? Doesn't mean it's guaranteed, but you can only work with the information you have available to you. Okay? So I hope this video has been useful, right? I'll journal this current short trade that I'm on, that I have on at the moment. You know, what you need to do is go and do exactly what I've done here. Mark out, you project using the manipulation, a target. Use Fibonacci to project a target using what I've shown you on this video. Okay. I will now journal this trade once I close it out. I hope the video was useful. I will now talk with you in a future video.